The most important stock in the world, Nvidia, has given us its earnings report, and on one side they met expectations and on the others they didn't. And of course it's led to a massive move in after hours trade, with over $300 billion potentially at stake here for the stock and trillions of dollars of flow in the markets themselves. We've got Qs, we've got S&P 500 and many others breaking to the downside. So where do all these markets potentially stop? Should we be looking at buying the dip? And is there something more sinister happening right now in markets? Yes, if you've been an eagle-eyed trader and investor, you may be aware that yield uninversion might be just around the corner. Today, we're going through stocks, commodities, and cryptos. It's going to be a great one. Join us now. Let's get into it, guys. No time to waste. Well, welcome back, guys, to the channel, and today we've got a big one because, of course, it was Nvidia earnings, the most important stock, one of the most important earnings of all time, and the markets were already selling off into the event. In many ways, kind of what we already expected on the channel. We knew that we were at a resistance, a call wall for Nvidia, and if it's your first time here, remember to subscribe if you're interested in finding out more about those types of things. We do have some dark pool activity as well, which I think you'll find very interesting, and of course the call walls and put walls coming up later on today's show. But let's get started with Nvidia earnings. So firstly, I posted over on X some interesting stuff to do with the earnings themselves. It was a beat in terms of second quarter revenue. It was a beat in terms of second quarter data center revenue, and of course Nvidia sees growth through the third quarter at about 2%. However, Nvidia also additionally improved one of the things that we always see as a nice Ponzi for stock market traders, and that is the quality of share buybacks. $50 billion coming out of nowhere, so that helps support what they already probably knew was going to be a stock market announcement to send the stock down. So there's always going to be two sides. There's going to be a bearish side and a bullish side. And I think the bears are going to say, yeah, Nvidia earnings were pretty good, but they're not great. They can't live up to the overhype. This stock is overhyped. It's too expensive. And you know what? Forward guidance, it just wasn't there at this stage. Now, of course, bulls, the argument is going to be, who cares about July and October guidance? That's irrelevant. We know that AI is poised to be bigger than the internet over the next 2 years. Now, if you're in the camp of saying that the internet is not as big as, of course, what AI is going to eventually become, then you might feel very strongly about Nvidia and say, you know what, I'm looking to buy the dip from a fundamental or your expectations in the future. Here at FX Evolution, you know, we just kind of go, well, is it cheap or expensive based on the overall analysis of the markets over time? We don't really like to go too much into that. Well, you can see here when we look at the forward guidance and we actually look at the forward PEs of the stock, it's trading, or was trading just before the earnings result, at right around fair value. So why do we know it's fair value? Well, it's the 3-year median you can see here across the board, and expectations are really whenever it's at fair value or cheaper than fair value, it's not too bad. When it's above these levels by over 1 standard deviation, that is, it's disconnected from reality completely, that's when you want to be realistically very terrified of a stock. And you'll notice with Nvidia that by a lot of metrics, it's not quite there yet. Now, is it expensive? Absolutely. Are we in an AI bubble? Absolutely. But you've got to remember, Nvidia is the leader of this bubble. And at this stage, remember, it had $100 trillion worth of CEOs at a recent meeting earlier this year, all clamoring to buy these chips. So it's clear that Nvidia's sold out for the foreseeable future. They're going to pretty much hit everything that you can really think of, at least in my expectation. And then the question really becomes is, what does the market really want to value it at in the future? Because, you know, they're already looking ahead at 2025, 2026, and they're saying, well, we cannot have any problems. Is this Blackwell CPU stuff? Is there something wrong there with Blackwell? What was the hiccup? We don't have that much. I noticed in the earnings call, they didn't really address it perfectly. You know, these things concern the market, and the market loves to do a big dump on retail traders as well. This is an interesting kind of look at it as well. Sestry and Capital Research here worked out that the EV/TTM was sitting around 50. Now, that compared to ex-growth defensive contractors is actually a pretty good value. And what this is the ratio between the enterprise value of a company to its annual revenue sales. And a lower EV revenue multiple indicates that the company is relatively undervalued to its enterprise value. Now, this is a decent number, and as you can see here again, if you're looking at something like AI and you're looking at Nvidia, it's not exactly cheap, but it's not exactly expensive when you consider it in the overall bubble of the current technology and the current runs that we've seen in the stocks. Now, I thought I had to give a shout out to Hindenburg Research because they have been absolutely knocking it out of the park the last couple of years with some of their particular stories. And this one was about 48 hours ago from about Super Micro. And of course, they found fresh evidence of accounting manipulation and released this data, pretty much suggesting they were net short. Since then, of course, the stock has absolutely tanked. It's in full capitulation mode. And you really do need to say, well, has this also dampened the mood a little bit on the Nvidia earnings? Has this also made people a little bit more skittish? Now, as we know, Warren Buffett says when there's fear or blood in the streets, maybe you want to start looking at the opportunity, and we'll do that very, very soon. But I did want to give them a shout out because that was some massive heavy hitting piece, and you might want to go check it out after watching this video over on X. US 2-year versus 10-year. Now, this is the other underlying kind of issue in the markets right now. Uninversion of the yield curve. Now, generally, when we see an uninversion of the yield curve, especially while we've been inverted for so long, it's the beginning of the end for markets. So that really means that you're usually on a timer before a recession itself. Now, remember that sometimes you can uninvert and stay uninverted for a long time before it does crash, but this is a big issue out there. So now we're going to have to start looking even more closely at the underlying health of the world markets. Now, as you can see here, JC Parrots from All Star Charts basically has a dashboard here of all the markets kind of around the world. And this is not exactly what I would say is a bearish looking market yet. Now, of course, we haven't even got a sign really of massive amounts of bearish markets out there, but it is something that we're looking at. Central banks around the world are starting to now feel the pressure to do cuts, and clearly unemployment is on the rise. So all of these problems are going to culminate over the next year. It's going to be an absolutely amazing year for traders, for investors as well. And I think the next 3 years in particular are going to be some of the most important to pretty much all of our lives. And this is the time that you really need to understand everything about markets. So it's great to have you on board, and I'm really looking forward to doing these shows over the next couple of years as we go through probably one of the most extreme market conditions we've ever seen in the history of market trading. Let's go through small caps because, of course, when we get a cut, which we know is coming up soon, in September, we tend to see markets actually do well in certain sectors as long as we don't have an impending absolute immediate recession. So one of the things that people have been looking at is where's the sector to be in? Well, as you know, the market's been asking for the 7, the Big Mag 7 to do very, very well. Now it's kind of turning over a leaf and saying, well, what about the other 493 companies at the S&P 500? What about the small Russell 2000 cap companies? Are they going to start coming and playing the party? And we do know that, of course, that could be the way that it ends up playing out. And a lot of this comes back to, realistically, the way the Federal Reserve is dealing with these rate cuts. Now, we know the Federal Reserve will not end up engineering a soft landing. It's going to look like that in the future, is my kind of thought process here. But they're probably going to have some kind of hard landing ultimately. But we know that when they do the cut rate is going to be very important. This is a great little chart here that was shared over, and I actually retweeted it over on X. And basically it goes through all of the previous cut cycles, realistically, of the modern days, since the 80s all the way to 2019. And what you'll notice is the cut cycles where we weren't going too drastic in terms of the overall cuts, they ended up in kind of very nice 365-day returns for the S&P 500, for the Russell 2000. But when we had cuts that were very aggressive and deep, such as what happened in 2001 and what happened in global financial crisis, they were extremely brutal. So it will matter to how much the Federal Reserve cuts, and it also will matter then what the market chooses to do. Will the market show us a negative structure and go bad, or will the market start to show us a really positive structure and continue to kind of bull up? The next 3 months probably going to show us a lot about what's in store realistically for a 12-month targeting point. At the moment, with the evidence we have, we still have to remain bullish and optimistic on markets, even though it's so easy to be bearish. At least that's the way I see it. Let's talk dark pool liquidity now for what's happening here, right now, over the next couple of sessions. Now, we've already discussed that we thought we were at a peaking point for the NASDAQ, we thought we were at a peaking point for the Russell, and of course for the S&P. And you'll notice there's a lot of dark pool activity going here on the ProShares Ultra Triple Qs. People are clearly taking what you have to think is a bit of profit ahead of the Nvidia earnings. And you can see it's same thing here when we look at the equal weighted NASDAQ shares, other dark pool activity going on around this level. So it tends to suggest that maybe a pullback could be coming. Now, when it came to Nvidia, we didn't see any huge, massive one single transaction, but we did see a lot of trades through the level itself. And that kind of opened up 115, which is where we find ourselves at this point, and the possibility of even a deeper pullback to the 61.8 fib. Now, these two levels in particular, 115 and the 61.8 fib, I think are some of the most kind of interesting levels for Nvidia. If we get back down to those prices, should we be bullish? Well, again, we want to be looking at everything and we want to consider it all together. Here we have what happened over the last 24 hours. Some things were up, some things were down. Semis, of course, were showing negative weakness. Gold stocks were also doing poorly. But some of the things that you'd usually see sensitive to a crash, regional banks, financials, they were still doing quite well. And we can see here the last 5 days of rotation, it's been regional banks, normal banks, and of course REITs and some of these other sections of the economy that have actually had some of the best returns. Semiconductors have now taken a back foot after being the best over the first week and a half since that crash that we saw already 3 weeks ago. Let's take a look at the S&P 500. I've been doing a bit of analysis here. I think we've all kind of agree on the fact that a gap fill would be really, really nice. The first gap and the most important one is going to be 54.50. Now, this has so many things I like about it on it, and I'll just kind of explain it to you here quickly. Not only is it a gap fill, but it also is a anchored VWAP level. It also is a 38.2 fib pullback. And of course, you can see on top of all of this, there's been a decent amount of kind of options that start to flow around those types of levels. So I like it quite a lot, and of course that would be a fantastic zone. But we have to keep our minds open to some different possibilities. Here's the updated options high and low levels for the day, just so you guys have it. I know you guys like that one. But this would be, of course, a real scenario. The possibility of a bounce here into this level and then sell back into the other gap fill that sits down lower in the 5300 could be a possibility. But the other one is that we get this drop here, this little bit of a flash that then rallies straight back up and takes the previous high. Now, this is a real scenario where basically Nvidia buyers just come straight into the market and they say, you know what, I don't care about any of you guys. This stock is good. This stock is cheap. We're going to push it higher. The bubble continues. Let's go. And if that does happen, because we have now taken out new lows in the futures market, etc., that we could actually start to really squeeze this market into a significant positive gamma situation. So it really comes back to this screener here, the options. So let's take a look at where the major options levels are over the next 24 hours. 5600 in particular is going to be a very important point. So of course we need to be looking at 5600, and you'll notice that there are more puts on this market at this stage coming into the Nvidia earnings than there are realistically on the call end. Now this suggests that maybe Wall Street might want to make a little bit of money from these guys and hold the market above this zone. If the market holds below 55.50, let's say over the next 24 hours, then there's going to be some hedging. We're in negative gamma at that point, and we know what that does. It'll flow on to probably 54.50. Why? Well, it's going to kind of feed upon itself. And you'll notice here over the next 24 hours, maybe the markets might potentially have a waterfall style effect, or they could hold themselves, and then it's the next session where it's more call based. This is coming into, of course, the Friday, and that could be actually where we get that further drop in markets. So it's going to be very, very interesting to watch that on the charts, and of course to be paying attention in particular to the options. For now, the bears are in control of the short time frames, and anything pulling back up into the structure is probably going to be met by, you would think, sell demand, and at that stage you're going to have to be looking towards the 54.50. Unless we do that instant double fake, pulls up, big aggressive candle, makes a new high, and then of course goes on to do a significant squeeze. We do know CTAs are completely behind the market at this point, so both NASDAQ and S&P 500 CTA positions, these guys are behind. Gold CTAs continue to drop while gold keeps pushing higher, which is certainly a worry, I guess, if you are a gold short-term bull. Same thing happening with silver. Brent, kind of up, down, and all around. We'll talk about that in a moment. And Nvidia, before, of course, the earnings, we all knew the big issue, the call wall. And it was just too much for it. Of course, Wall Street loves making a bit of money. And this will actually be updated over the next 24 hours. So make sure to stay tuned for that, because the call wall was too much. 120 is where some puts are, but we don't really have some of the reads on this screen anyway, all the way down to 115 or 100. But I would suspect some large options activity on Nvidia. This could be a case where it's patience, basically react, don't predict. Let's see how things play out over the next 24 hours. Now that we know we're at 115 in aftermarkets trade, if the market keeps selling off, if we get an S&P 500 to 5450, that could be the perfect opportunity for an Nvidia buyer to say, you know what, I really like this price. What about Tesla? Well, Tesla's trading about 205. The significant level is got to be 200. That's a massive put wall. You can see how many puts are sitting on 200. So 200 is going to be where most buyers are going to be looking for some structure formation. Now, because we know yield uninversion is starting to come, that makes us interested in things like treasuries, in bonds in general. And in particular, if you look at treasuries, you can see here that the markets are starting to coil. They're starting to sit just around this 98, 99 zone. Here is a level that if treasuries break out to, you've got to be thinking, you know, can we get to 110 at that point? But as I always say on this channel, as we talk about together, it's not really about trading treasuries. You've just got to kind of know where you are in the cycle. And because we believe we're in late cycle, which usually lasts for anywhere between 1 to 2 years, we're about 6 months into it at this stage, then generally speaking, we have to say, well, treasuries are good, but you've got to have a horizon of at least 18 months on that type of position. Let's talk US dollar. So this one actually was really good for the day traders. We suspected US dollar would find some strength in it, and it has so far. You can see here it's come back down. We talked a lot about the legs, and we've done that in the previous videos, so you can go check that out. But basically, we made a doubling bottom style pattern here. We saw a little bit of strength in the dollar. I think there's a real possibility of getting it back to around 101.30, and that's certainly something to watch. When we move over to gold, you can see here the trend is still intact on the upside, so obviously still bullish. Some levels for buyers to be looking at, 24.83, 24.50, those types of levels are good. And silver took a bit of a dive, but still well above its daily 20 moving average. So around this level here for silver, still very interested to see bulls regain control of this one. And of course, silver is very cheap in comparison to gold in this current market. Now, we saw a massive sell from oil. It went really strong. Oil's trading typically into election very difficultly in some ways, and it went up huge, and then it sold all the way down to a 61.8 fib. Now, the golden fib then acted as a bit of a buying pressure. For swing traders, you're going to need to get it above 76. Above 76 should bring the buyers, but for somebody that's looking at, let's say, this smaller market action, you'll notice that actually already it's shown some signs of recovery. So for some buying traders, you might like oil around this price and obviously be looking towards the long end here as it has started to form some decent structure on the small time frames. Now over to Nvidia. So Nvidia trading at 125 into the close, ended up being at about 116, 115 after hours, which pushes us into the anchored VWAP 38.2 fib retracement level. This is not a bad zone. Of course, the best zone here is going to be around 106, 105, which I've seen a few of you mention. If that happened, yeah, they're a very strong level for it. But again, this is expected. We got our stop sign indicator. If you're ever interested in this thing, it's in our advanced course. But basically, this is just showing you that there was a heat in this market that needed this pullback. It is perfectly normal. I personally think that Nvidia's earnings were pretty much on par. They managed to hit expectations. I think in general, the markets love being optimistic. So any freak out here will probably be bought up. And in general, you got to bet on the winners of the current AI bubble. If this is over, then of course, well, Nvidia effectively topples everything. But we're already starting to see what I would say is normal inside of any bubble, which is a bunch of scams that are getting kind of exposed, a bunch of companies that are getting exposed for maybe not being the best in terms of the book, and people are starting to question stuff. At the same time, Nvidia is living up to expectations. So I think this 115 level is very key, and we want to see market structure around there. So we'll watch that over the next 24 hours. Tesla, 200 is the key. Of course, around 200, 197, you'll want to be seeing buyers come in if it does get back to there. And if we have a look at semiconductors, Of course, it's very important for us to have a look at the semiconductors market. Again, a pullback is in order after such a big move. Just to put this in perspective of percentage, you got to remember it moved up 26% without one pullback. So it's very normal for us to see these types of pullbacks, and price ultimately is key in that aspect. Let's move over to a few other markets, and we'll talk about the US in just a moment. HSI, this is the Hang Seng, again holding up relatively well. You can see here that the market is actually finding some buyers. So this is good. It might take a bit of a breather here and find some structure. The good signs for people in this particular indicator or this particular market is that it's moved above the 20 moving average and it's found that as dynamic support and resistance before. So this is why we use the 20 quite a lot, the exponential in this case, and it's doing a decent job. Let's move over to the Dow. The Dow held up really nicely. And again, this shows you the tale of different markets. While Nvidia is the most important stock, the rest of the companies are starting to move up. And if you have a look at something like RSP, which is of course the equal weight market, you can see here it's still breaking through to all-time highs. And I would expect some little potential pullbacks here, but mostly just pullbacks in time, sideways style markets. Same thing happened on the US 2K, down to 2150 would be pretty good here. And I guess it does suggest to me that there should be still a little bit more selling to come. Ideally, we would at least hit the gaps here. S&P 500 to 5450, US 2000 down to at least 2150. And you'll notice that all of them, after hitting these key levels, need these pullbacks. They're all showing these signs, which is totally perfectly normal. What about the NASDAQ? Well, the NASDAQ is the same. I've been looking at the Qs in particular here, just because I'm more interested in the gaps. And you'll notice here the two gaps, 463 and 450. So we're getting closer to the 463, certainly a level for day traders, investors, swing traders, everybody to be starting to look at these markets. Remember, 38.2 fibs, decent pullbacks, and pretty much where you want to be. Now, you could make an argument that where it closed was pretty good as well, because of course, you might notice the 20 moving average has acted beautifully for this. Dynamic support, dynamic resistance, resistance, support. It's okay. But of course, we don't have a strong sign of a buyout just yet. We will update you guys when we start to see that. What about Bitcoin? Well, a surprising flash crash. I've been told that its liquidation of a few large positions did happen, and this sent the markets, of course, down heavily. You'll notice here that we've hit back into that first bull level we liked so much, and the markets have started to stabilize there. Now, I really like the action. You might say, well, wait a second, how do you like the action when you're down in these levels? Well, I like the way that it's structuring up, and of course for now, I think bulls above 60,300 could be really strong. So yeah, some nice stuff going on here in the markets on Bitcoin. You might say, well, how can you like going down? I just think it's been very technical. 65K, we knew that was a problem. If we got through there, we'd get to 68. If we got through 68, we'd be at all-time highs. We've come back down to the key level. We've found some good structure now. Let's see if we can get through 60,300. If we can, the bulls might come back into crypto, and that flash crash will look like nothing has ever happened. When we go over to this week's kind of major news, we know really the only thing that matters here is probably going to be the Friday core PCE that's coming out at 8:30 New York time. And as always, guys, if you enjoyed today's video, if you enjoy the content that we've been putting out, please remember to subscribe, follow us over on X, check out some of the other stuff we do. And yeah, it's been a great time. Now, we will resume our normal videos past this point. I've just been at a conference this week, but I hope the quality of the mic and everything is not too bad. All right, thank you so much. NVIDIA. Let's see what happens next. Bye for now.